Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking equities and E-mini S&Ps. A tad lower today. Really not seeing a whole lot in the market as we enter into that sort of that purgatory post-Christmas, pre-New Year's period. Some will call the Santa rally, but I think that right now we've maintained the trend. We're still basically a stone's throw from the all-time highs, and the market is now kind of waiting for the next event, waiting for earnings, waiting for the Fed to step up in 2018. And likewise, it's not going to change based on modest weakness in the technology sector, based on lower than expected phone sales. So right now, the market just holding its own, I think, as we head into that Santa rally period. And if volatility, which has been trending lower, I saw a little bit of an uptick today, but certainly nothing that would say concern or even fear is priced into the market. Right now, volatility remains on all-time lows or near all-time lows, despite the fact that there is a lot going on into the new year. How to interpret tax reform. We have a new Fed chair taking over. We've got a president that's still trying to get a number of policies through. And we have a lot of geopolitical risks that are on the rise. So the fact that the market remains in a trend moving upwards and volatility remains very low suggests that a lot of these other issues aren't being priced in, or there just isn't a concern. Nothing will stop this speed train from continuing to move. And if we look at year end, sometimes we've seen in the past, we've seen sellers looking to take advantage of perhaps tax advantages, tax issues they might have. We're not seeing that as much this year based on the tax reform. Doesn't mean it won't happen, but if it did, it's probably already happened. And I think that right now that's really not going to have any effect on the market as we go into this last week of the year. We should continue to see more of a sideways trade, maybe with a slight up trade if we start to get any sort of positive news based on the Christmas sales, on the holiday sales. Likewise, if anything comes out that's positive or is interpreted more positive through tax reform, we could also start to see that uptick the market as well. But I don't see us making a big move higher or lower as we are in this 52nd week of the year. I look for things to trade sideways, and then we'll really hit the ground running when we get through January. Not only when we get those FOMC minutes from the December meeting, but we also have a Fed meeting at the end of the month. That will be Janet Yellen's final meeting as Fed chair. And so those will be the two big events that we see moving forward. But for right now, it's steady as she goes in equity world. This is Todd Colvin coming to you from the floor of the CME Group.